Today, we're diving into the latest financial report from MetaHealth, and let me tell you, it is a fascinating story. On one hand, you've got this explosive, absolutely eye-popping growth, but on the other, you have formal warnings from auditors about the company's very ability to survive. So, what is really going on here? Let's decode these numbers.
Okay, so first up, let's get right to the big, flashy number, the one that grabs all the headlines. When you open up MetaHealth's latest report, there is one figure that practically leaps off the page. That's right, over 3,000%, a 3,045% increase in revenue compared to this time last year. That is just staggering. A number like that usually means a company is firing on all cylinders, right? A total rocket ship. It's the kind of growth investors dream about.
And that right there is a central mystery we're going to unravel. You look at a number like 3,000% and you think, wow, they must be crushing it. So how do you square that with the fact that this company is facing some really serious financial questions? This is where the story gets so interesting, because that incredible number, it's hiding a much, much more complicated reality.
Because when you look past that incredible headline growth, there's a pretty significant problem lurking in the financial statements. And, it's the kind of problem that makes auditors really, really nervous.
In the world of finance, there are a few things more serious than when a company's own auditors, the people paid to check their math, raise a big red flag. And in this case, the warning they issued is one of the most serious a company can get.
It's called a going concern warning. And that's basically just a formal accountant's way of saying, hey, we have serious doubts that this company can pay its bills and stay in business for the next year. It's a formal declaration of major uncertainty. So the big question is, why? Why the warning? Well, here's why. Because despite that massive revenue growth, the company posted a net loss of 1 million Singapore dollars for the first 9 months of the year. Put simply, they are spending far more money than they're making. And that's the root cause of that scary going concern warning.
And that $1 million loss is really just the tip of the iceberg. When you dig a little deeper, you see the real strain. Their liabilities, what they owe, are $1.2 million more than their assets, what they own. Even more urgently, their short-term debts, the bills due within a year, are $1.4 million higher than the cash they have on hand to pay them. And on top of all that, just their day-to-day operations burn through another $1.1 million in cash.
So this is the paradox, right? How can you have a 3,000% revenue spike and $1 million loss at the exact same time? The numbers just don't seem to add up. To understand it, we've got to look behind the curtain and see what's really driving this story.
And here it is. This is the big aha moment. That incredible growth wasn't organic. They didn't just wake up and start selling 3,000% more of their products. Nope. What happened was MetaHealth went out and bought another company, JAS Medical, late last year. So of course this year's revenue looks huge. They've added a whole new business to their books that just wasn't there last year.
But here's the thing about buying a business. You don't just get their revenue, you get all their costs too. And this chart? Wow, this chart tells a huge part of the story. For the first 9 months of the year, MetaHealth brought in just over $1 million in revenue. But in that same period, they spent $1.4 million just on employees' salaries and benefits. Think about that for a second. Their payroll alone was more than every single dollar that came in the door.
Okay, but wait a second. You might be thinking the numbers are bad, but are they getting worse? And that's a fantastic question. Because this year's $1 million loss is actually significantly larger than the $700,000 loss they had in the same period last year. So even with all this new revenue, their financial hole has actually gotten deeper. Why?
Well, the answer is kind of hidden away in the accounting books, in a line item called Other Income. You see, last year their results got a huge one-time boost from a $1 million recovery related to some issues at a subsidiary. It was a fluke. It made last year's losses look a lot smaller than they really were. This year, that one-off income is gone, and what's left reveals the true underlying losses of the business.
So, okay, the situation looks pretty tough. They've got an auditor's warning, they're burning through cash. What are they doing about it? Well, the good news is they have a plan. The company has officially laid out its strategy to turn things around. In their report, they directly acknowledge the auditor's warning and lay out a very clear 4-step strategy to make sure they can in fact continue as a going concern. And it's a multi-pronged approach. First, the obvious one, cost reduction. They're implementing cuts across the board. Second, they're managing their debt by going to creditors, like the Malaysian Customs Department, to negotiate new payment plans. Third, they're actively working to collect money they are owed, like a settlement sum of over $136,000. And fourth, and this is absolutely critical, they've secured a promise of financial support from a controlling shareholder to help them meet their bills over the next year. It's their safety net. So with this plan in place, what does the future hold for MetaHealth? Fixing the internal problems is one thing, but they also have to deal with the realities of the market out there.
And this quote, straight from their own report, pretty much sums it up. They know it's not going to be an easy ride. They're anticipating potential headwinds. That's corporate speak for tougher competition and customers who are spending less because of inflation. So even if their survival plan works perfectly, they're sailing into some significant economic storms.
And really, that's the ultimate question this whole report leaves us with. MetaHealth made a huge, bold move, buying growth with the hope they can absorb the costs and eventually become profitable. Is it a visionary strategy to rapidly scale up in the healthcare market? Or is it a high-stakes gamble that has stretched the company's finances to the absolute breaking point? At this point, only time will tell.